You know what's crazy? I've been watching what the banks are doing,
Mm-hmm.
not what they're saying,
Mm-hmm.
what they're actually doing.
Mm-hmm.
And if you pay attention to their actions, not their words,
Mm-hmm.
you'll see something most people are completely missing.
The banks know something's coming, and they're already moving their money and their strategies, but they're not telling you to do the same. That's the conversation we're having today, because what the banks do always predicts what happens to the rest of us about 6 months later. Last month, I got a call from a client of mine. She said, Monica, I tried to wire money out of my account. My bank told me they couldn't process it without a compliance review. A compliance review. For her own money, she called me back 3 days later and said, they're asking me where the money is going, who it's for, why I'm moving it. For $200,000. This isn't new, but it's accelerating, and it's happening to more people. Here's what I'm seeing across the board. Banks are installing limits on withdrawals, not officially, but practically. Banks are requiring documentation for transactions over a certain amount.
Yeah.
Banks are freezing accounts temporarily during review periods.
Yeah.
And this is happening at the major banks: Chase, Wells Fargo, Bank of America. You might think, well, that's anti-money laundering. That's compliance. But here's what people don't understand. Compliance is the cover story. What's really happening is the banks are preparing for something, and they're testing the system to see how much they can restrict money movement without people losing their minds. The Federal Reserve has been raising interest rates aggressively. You know what that does? It makes borrowing expensive. It slows the economy. It makes people hold on to cash instead of spending. But here's the thing. The government has spent money like crazy, and they need it back. So what do? They control the money supply. They make it harder to move money. They create friction, because if people can't easily move money, they can't easily hide it. And if they can't hide it, the government knows where it is. And when they need it, they can access it. I'm not saying that's the official plan, but I'm telling you what I'm observing. The Treasury Department has been talking about implementing central bank digital currency, a CBDC. You know what that means? That means the government issues digital dollars directly to you, not through banks, directly. And with the digital currency controlled by the government, they can do things they can't do now. They can see every transaction. They can set expiration dates on money. You have to spend this by this date or lose it. They can prevent you from buying certain things. They can freeze your account with a keystroke. And there's nothing you can do about it because the money doesn't exist in a bank. It exists on a government database. Now, am I saying this is definitely happening? No. But am I saying the banks are preparing for this possibility? Yes. And the fact that they're restricting movement now is practice. It's testing the system. Here's where this hits us differently. Black business owners are already operating with less access to capital. We already have lower credit scores on average. We already have fewer banking relationships. And now, if the banks are tightening controls, we're the ones who suffer first because we're already seen as higher risk. A white business owner wants to wire $50,000, they get it done in an hour. A Black business owner tries to wire the same amount, compliance review, documentation, phone calls. This isn't theoretical. I've watched it happen to clients in my network. One guy, successful real estate investor, tries to move money between his accounts. His bank puts a hold on it. Why? They said unusual activity patterns. His pattern, normal business transactions. They're concerned we need to make sure this is legitimate. Translation, we're questioning your right to your own money. So here's the reality. If the banks are already restricting money movement, Black entrepreneurs need to be thinking differently about how we store, protect, and deploy our capital, because the rules are already changing and we're not getting the memo. You know who's not worried about bank restrictions? The wealthy, because they don't keep their money in banks like you do. They use private banking. They use offshore accounts. They use trusts and family offices. They have access to financial tools that most people don't even know exist. And the wealthiest families in this country have already moved their money. They've already diversified out of the traditional banking system. They have real estate. They have commodities. They have other currencies. They have art. They have private equity stakes. They're not relying on a Wells Fargo account to protect their wealth. But the middle class, the working class, we put our money in a savings account and hope the FDIC covers us up to $250,000.
Yeah.
That's our security blanket. And that security blanket has holes in it that the banks know about but aren't telling us. So the real question is, what are the 1% doing that we're not seeing? And more importantly, what should we be doing differently with our money right now? Listen, I'm not telling you to pull all your money out of the bank tomorrow. That's not the play. The play is preparation. The play is understanding that the financial system is shifting and you need to shift with it. Here's what I'm seeing successful Black entrepreneurs do. Number one, diversify your deposits. Don't put all your money in one bank. Spread it across multiple financial institutions, different banks, different account types. Because if one bank has an issue, you're not wiped out. Number two, build non-bank assets, real estate, a business that generates cash flow, products that sell, intellectual property. These things aren't sitting in a bank. They're working for you. And they can't be frozen by a compliance review. Number three, create velocity with your money. Don't let money sit idle. Move it, deploy it, make it work. Because if money sits in a bank, it becomes vulnerable to the bank's decisions. But if money is moving, buying inventory, funding growth, creating returns, then it's protected by the fundamental value of the business. Number four, understand alternative finance, peer-to-peer lending, cryptocurrency for certain uses, precious metals, foreign currencies in certain contexts. I'm not saying go all in on any of these, but I'm saying the most financially literate people I know have some exposure to things outside the traditional banking system because they know the traditional system has limits. Number five, build relationships with alternative lenders. Don't rely only on bank loans. Build relationships with private money sources, other entrepreneurs, investors, people who can fund your growth outside the traditional banking system. Because if the banks tighten, you still have access to capital. Here's what I want you to understand. The time to prepare is now, when things are relatively stable, not in 6 months when the crisis is obvious, not in a year when everyone's panicking, now, because the banks are already moving. The Federal Reserve is already shifting policy. The government is already talking about digital currency. These aren't hypothetical conversations anymore. They're in motion. And the people who prepare now will have options when things get tight. The people who wait will have panic. I'm not being alarmist. I'm being realistic. The financial system is more fragile than it looks. And the people in charge know it. And that's why they're restricting money movement. That's why they're testing digital currency. That's why they're building safety nets for the wealthy while the middle class is left to fend for itself. But you don't have to be part of that middle class that gets left behind. You can be someone who saw the signals, who understood what was happening, who prepared. That's who I want you to be. So here's what I need you to do. This week, audit your banking situation. How many banks do you have accounts at? How much money is in each? What would happen if one of them froze your account for 30 days? Could your business survive that? If the answer is no, then you have work to do. And that work starts now. Because the banks aren't going to warn you. The government isn't going to tell you. But Monica Rivers is telling you. The signals are there. The time to move is now. So what are you going to do about it? Are you going to be someone who saw this coming and prepared? Or someone who wakes up 6 months from now and wishes they had? Because that choice is happening right now in the decisions you make this week.